Good evening. This is Startup Central right here on ET Now. With me, Avanne, Dubash, the show focused on entrepreneurship, new age tech, and all things to do with startups. If you want to connect with us or if you have any comments, you want to reach out, simply do so on suc@etnow.tv or on my Twitter handle. What's the topic of conversation today? Well, we put the spotlight on the big game changer that has taken place when it comes to cryptos with the US SEC approving Bitcoin ETFs. A watershed moment, so we'll find out what it means for the sector as a whole. We'll also get in some more management perspectives up ahead on the show and get you Ola's financials. That and lots more lined up. But first up, your Fatafat stories in the startup world. All right, first up on the show, as promised, we talk about the big news within the crypto world. The US Securities Regulator has approved the first US listed exchange traded funds or ETF to track Bitcoin. This is a watershed moment for the world's largest cryptocurrency and the broader crypto industry as a whole. In fact, this green light marks a complete U-turn for the SEC, which had earlier rejected ETFs due to worries that they could be easily manipulated. Let's understand the implications of this move. My colleague Sharad Dubey joins in with the details. Sharad.
It's a big relief for the crypto markets if you look at it, and the US regulatory body SEC has actually approved the first US listed ETF which will be tracking Bitcoin. Now, roughly initially we'll be having 11 approvals going ahead, and these are big names coming in from ETFs such as BlackRock, ARK Investments and even Fidelity. Now, what happens is there's an important regulatory approval comes in from institutional players. Much more institutional flows start coming in Bitcoin, and do remember the entire Bitcoin space, if you look at the entire crypto market, almost 60 to 65% of market capitalization is actually held by Bitcoin. And traders are suggesting that the 2024 end numbers could actually range the Bitcoin levels between $80,000 to almost $1 lakh. Now, important thing to notice is currently the levels are ranging between $45,000 to $47,000, and it's expected that over the next 1 month or 2 months, it's expected it will touch the $50,000 mark as well. Now, charting the Bitcoin's growth in 2023, it has been a top performing asset, giving more than 150% return. And if you look at the numbers which have been coming in, almost 161% return, and even in this year itself, if you look at it, a 10% jump has been coming in. Apart from that, there's a Bitcoin outlook for India as well. What lies for India? And of course, the overall volume exchanges, that has been very low. Two reasons for it: the regulatory and the taxation issues are still there, and recently Binance and other crypto apps are also removed from the App Store in India as well. So this is an important development coming in for Indian investors as well, and we'll be looking at from the government what will be their stance when it comes to the crypto.
Thanks for that, Sharad. In fact, let's delve deeper into this topic, given that it's a complete game changer when it comes to Bitcoin, but some as well talk about how it's perhaps a historic mistake. There's two sides of the story, but let's understand what exactly this move means for players within this space. Joining in on the show right now, we've got Mridul Gupta. He's the COO at CoinDCX. Thanks so much for taking time out, Mridul. A lot of experts are hailing this as a huge positive for the institutionalization of Bitcoin as an asset class. How exactly are you looking at this move of really democratizing access to cryptos and this asset as a whole?
Sure. No, this is definitely a very, very big milestone, and the entire industry in crypto and the entire financial services industry has been waiting for this moment for the past entire year. We have seen multiple back and forths around it. To begin with, this basically opens the asset class to people who have been waiting out to participate in the Bitcoin price appreciation phenomena. A lot of institutions, a lot of retail demand, which was waiting and was not clear if they should directly buy Bitcoin, are now more comfortable buying the ETFs because they already have a registered account with their brokers. they have gotten some kind of regulatory clarity. They have gotten some kind of compliance clarity. So it's definitely a very, very big phenomena. We have already seen the price of the Bitcoin move by 60% or 70% or so in the past quarter, October to December. We anticipate this push to sort of also result into more price appreciation as we step into 2024 and see more retail and institutional demand making the price go up.
Right now, Mridul, you also have Standard Chartered analysts who've actually said that ETFs could draw as much as $50 to $100 billion this year alone. Some analysts are saying it's a lot more conservative, maybe $55 billion over the next 5 years. What's your assessment in terms of the kind of flows that we could see from ETFs?
No, this is definitely in the right ballpark numbers. So I'll tell you the biggest problem with the industry today, which is that institutions have still not participated in the Bitcoin or the crypto industry to that extent. We are already around $2 trillion industry. But with institution participation, this becomes even more strong, even more bigger. For institutions to participate, and especially the US institutions to participate, which are the giants, you need the products which are which are offered on an exchange, which have certain more transparency with respect to the things the institutions can do. So with the ETFs coming in, we definitely see a lot of institutional demand coming in the market. We also see retail demand coming into the market, and these retail demand is people, for example, who would have created their account on brokers like Charles Schwab, on brokers like Robinhood, on brokers like Public, but they have not yet created the accounts on crypto exchanges. So for them, suddenly with the same account, they can tap into the crypto price appreciations by buying into ETFs. So it suddenly unlocks a very huge market which has been waiting on the fringe. And we definitely anticipate the inflows of around $100 billion plus coming into the market as we witnessed 2024 though.
Do you think that now we could see a complete increased choice for investors who actually want to engage with cryptos, that now investors who may be sitting on the sidelines or maybe thinking, no, I won't look at this as an asset class, too risky, will now become a lot more receptive, your view?
Yeah, definitely. So this ushers in new wave of investors who can now participate, who were earlier waiting on the fringes. They were not yet clear because sometimes they would want to create an account, but they are not yet clear if they can easily create an account, if they which crypto exchange should they go to, etc., etc. Now with the ETFs, number one, they can open the account and they can buy ETFs on their existing brokers. Number two, with the larger institutions coming in, they are also the retailers who have been waiting on the fringe are also more aware that this is an asset class information, and we can put our hard-earned capital in this asset class. And we see two things because of that. Number one, more investors coming in, but also more capital coming in from the existing investors.
And you know, some regulatory experts actually believe that Bitcoin ETFs can also pave the way for other innovative crypto products. Do you believe that we could see that? And if so, what kind?
We are already seeing a lot of innovative products, and believe it or not, Avanne, like these products are on blockchain as well, and these products are being positioned as more ETF style as well. The other day, I was talking to someone who was digitizing the US bonds and US Treasury, and anybody in the world can buy US bond and US Treasury with this digitization and it being available in blockchain. So I think the sentiment is largely very, very strong, very, very positive with this news. This opens new products in the crypto market. This opens new financial products on top of crypto markets, right? So it opens both the markets as we move forward. For example, the ETFs right now are spot ETFs and they run primarily on Bitcoin. We could also witness spot ETFs on top of a basket of assets. It could be Bitcoin plus USDT plus ETH plus something else, right? We could also witness futures ETFs. So that is on the ETF side where we could witness more and more products. We could also see portfolio management services as a market coming up as more and more people enter the market. And on the other side, on the blockchain side, we are seeing a lot of DeFi products coming up, which allow you to lend, borrow, which allow you to trade seamlessly on DEXs, which allow you to invest in real world assets with the help of crypto, like the example of US Treasury I was giving. We are also witnessing an era where a lot of real world assets are getting digitized on blockchain. So you can invest in a real estate market in Dubai. You can like invest in a part of a building by buying the assets of that building on a blockchain. So definitely a lot of new products will start coming in the market as we see more investors coming in the market, because now there's more interest and now there are more people to offer your products to.
So for CoinDCX itself, what exactly does this move mean in terms of the incremental flows that you're expecting? What does it mean for the company as a whole?
The volume is a function of multiple things. ETFs obviously solve for a lot of new demand coming in the market. It also solves for the perception in the regulated domains, in the compliance domains. So we see expedited actions on the regulation and the compliance front in India. We also see more and more people entering the crypto ecosystem because of the positive news around the market. And this positive news, obviously ETF is a big news. So that obviously makes a lot of people reconsider Bitcoin and reconsider other crypto assets for their investment. At the same time, the price and the regulation and the compliance work which has been done by the players also helps in setting that charter. And we see more and more people coming in the platform in 2024.
And finally, according to you, what's the road ahead when it comes to cryptocurrencies as an asset class, in particular, how you're looking at it growing in India? Because, you know, the view seems to be very divided.
It definitely does. We are at a point where the countries are in the race of who gets to regulate first or who gets to build a compliant framework first. We have already seen compliance framework emerge in the Middle East. We have seen US come up with guardrails around the investments and trading in crypto. We are now seeing Europe warm up to the idea of regulation, and their deadline for putting up a regulatory framework with the help of MICA is around end of 2024. We are seeing similar regulation frameworks appear in South Africa, Nigeria, Turkey, Indonesia, Thailand, etc. I think if we talk about India, we have very early framework in the form of PMLA compliance with the help of Financial Intelligence Unit India. We are now engaging in more talks with potential regulators, policymakers, and think tanks of the contours of regulation of the framework of regulation. We definitely see that as a very big trend in 2024. So compliance and regulation is one of the pillars on which we built CoinDCX, and that pillar will continue to get strengthened as we see more regulatory frameworks coming in 2024. Number one. Number two, a lot of people feel that compliance and regulation is not right. We have always taken a contrary approach. We have always believed that compliance and regulation gives you an advantage in this industry and makes you succeed in the long run. Because of that, if you see the past 30 days to 90 days behavior on the platform, we have increased our volumes by a factor of 5. We have increased new user onboarding by a factor of 3. We have reduced customer problems by a factor of 5. So we are seeing a lot of streamlining on the customer experience. We are seeing 3 to 5x more customers participating, and we have seen for the same customers which we had onboarded, 3 to 5x more capital coming and churning on the platform. So we continue to expect that same trend follow at least for this quarter. I can't comment over the entire year, but fingers crossed for the entire year as well.
All right, Mridul, thanks so much for joining in. Good to have you on board. Let's move right on then away from that. And ANI Technologies, which is actually the parent company of cab hailing startup Ola, they've come out with their numbers. They've cut down their net losses by nearly 50% to 772 crore rupees. Let's break down the numbers for the financial year ended March 31st. We've got Aishwarya, my colleague, joining in with the details. Aishwarya?
Well, the parent company of Ola Cabs, ANI Technologies, came out with their results. First off, taking you through the standalone numbers, the standalone losses narrowed to 65% to almost 182 crore rupees in FY23 as compared to a loss of 3,082 crore rupees in FY22. Now, the sales figure that has surged 63% to 1987 crore rupees from the previous figure of of almost 1220 crore rupees in FY22. As far as ANI Technologies business verticals are concerned, let's break that down for you and what numbers have been declared by the company. First off is the Ola Fleet Technologies Private Limited, which is a ride hailing and cab hailing business. Second is the food delivery business, also called as Spices E-Services Private Limited. The next one is Ola Stores Technologies Private Limited, which is the grocery business. And finally, the Ola Financial Services business, which has postpaid, credit cards as well as other money wallets. First off, Ola Fleet Technologies saw a revenue of 189 crore rupees in FY23 as compared to 437 crore rupees in FY22, which is down nearly 57%. The losses figure there, that has stood at 387 crore rupees as compared to 467 crore rupees reported in FY22. Now, the food delivery business, which in 2022, by the way, was narrowed down sharply. They scaled down their food delivery business, and now there has been an understanding and a partnership with ONDC that that is sold through, obviously, and the service is obviously provided with the Ola Cabs app. As far as the losses there, they narrowed to 106 crore rupees in FY23 versus 504 crore in FY22. Now, Ola Stores Technology, which is the grocery business, saw a loss at 81 crore rupees in FY23, which is narrower than last year, and last year the figure stood at 150 crore rupees. As far as Ola Financial Services is concerned, the loss stood at 54 crore rupees and the revenue that stood at 85 crore rupees in FY23 versus 110 crore rupees in.
All right, let's move right on then. And NTT's data center business in India has been growing at a very healthy clip. India, for one, has been one of the fastest growing markets as well for the company. My colleague Sumita Karir caught up with Doug Adams, the CEO and president at NTT Global Data Centers and Submarine Cable. Let's listen into what he had to say.
Well, as NTT has made a very sizable commitment to India. Of our 330,000 employees that we have globally, about 40,000 of them are out of India. So it's already one of our largest employment markets globally. Part of that is because of the financial and the political stability of this market. So it's a very stable market. It's a large growing market, largest population in the globe. And it also has a very large skilled pool of labor. So that's caused us to make a disproportionate globally amount of investments to the India market because of that stability and because of the skilled labor pool, because of those factors.
All right. So, I mean, you say that, you know, because of stability in the policy landscape and, of course, availability of labor as well. In fact, as we speak, there are pacts getting signed in the space of semiconductor space as well, which India has really been strongly working towards. Micron entered the country with a massive investment last year. And, of course, industry experts have been saying that it will at least set a base for other Indian companies and, of course, other companies to set up their bases in India. You know, of all the things that India is really bullish on, I want to understand, you know, from your perspective, on which are the areas that NTT is looking into venturing in and kind of having discussions with the government as far as these areas are concerned.
So I think NTT is having high-level discussions at all levels about different opportunities. I know a couple of years ago we publicly announced that we entered into a $2 billion MOU with the government. I think there are other conversations that have happened that are happening about different opportunities for us to grow the business and the economy of India.
As more and more people are actually coming online, as more and more businesses are getting connected, getting online, I want to understand from you, basis, of course, the India market, which are the sectors that are really looking attractive to you and which are the sectors where you look at expanding your business in?
As far as verticals within the India market, I think that we've historically done very well in the financial side. I think it's been our core strength. We also do extremely well in the government sector. So I think those are probably the two strongest. The third that's come on very strong in the last couple of years is cloud. And I do think that we haven't quite seen the real movement of AI into the India market yet. I think we're well positioned given our technology and given our previous experience of actually supporting AI in other parts of the globe to be able to make a very strong presence here within India to support AI.
My colleague Sumita Karir also caught up with Shekhar Sharma, CEO and MD at NTT GDC India and NTT Com India Network Services. Let's listen in.
Yeah, so as I earlier had spoken that, AI is like agnostic of where, the data centers are. So while the research could be happening somewhere, data could be residing somewhere else, right? So I think now coming back to Noida is we can't compare Noida with Bombay or, Bangalore or anywhere else. But yes, it has its own niche about what is happening. And what we have looked at is the seismic tampering that our data center is going to be, kind of equipped with. So that was the need in north, because we see that none of the data centers have that, and maybe one of the reasons that people don't come here, one of the could be, is also the the seismic kind of dangers that they look at.
And if you're a startup that is looking for exposure, you want to build your brand's presence, well, we've got good news for you, because the Times Network has launched Brand Surge. It's an initiative that empowers startups to achieve scale, to surge ahead with innovative advertising solutions. Take a look.
Attention startups. Reach 25 crore people well within your budget. Advertise on 10 TV channels in one shot. No TVC required. Brand startup pack starting from just 1 lakh rupees. Brand Surge, the special marketing starter pack for startup brands. For more details, visit our website brandsurge.co.in or write to us at brandsurge@timesgroup.com. Times Network, now or nothing.
All right, and with that, we'll wrap it up on this leg of the show. Thanks so much for tuning in. Do remember to stay connected with us. Catch you same time tomorrow.